Today is Thursday, July 31st, and welcome to the Positively Sloped podcast.
Hi, Jake.
Scott, after months of intensive R&D and internal workshopping, we have landed on Positively Sloped. Tell us what Positively Sloped's about.
Jake, Positively Sloped is where markets, culture, momentum collide. Why? Because it's the most interesting things in the world, or they are the most interesting things. From stocks to sports to music, those are the ones that are trending up and to the right, and henceforth, positively sloped. And so people that listen to me know I love to say that markets are positively sloped and they're historically positively sloped, but we figured we'd take that concept further out and expand it just outside of markets, but more towards, say, conversations we've been having for years on debates, on hot takes and deep dives, and just now with maybe a mic in front of us.
Yeah, that's right. And this was an easy one for us to set up. And we started the show because honestly, these were the conversations that we were already having, like you just said, right? From stocks, sports, streaming, startups, and everything in between. There's a lot going on in the world, and headlines move markets, and memes move group chats, and we're here to help make sense of it. Think less CNBC and more banter.
Yes, and we'll cover what matters too, Jake. I think that's important to note is that we'll have earnings, we'll have trends, we'll have trades. We're going to talk LeBron. We're going to talk Taylor Swift. We're going to talk, of course, Travis Kelce, Justin Bieber, ticket prices, all the prices that you pay that I can't believe you do pay for when you go to these entertainment valued things. But why everybody's suddenly so obsessed too with like stuff like pickleball and stuff like watching and trading stocks all the time. It's like there's the things that people love, and we're going to talk about them as they relate to your economy.
Pickleball, great sport. But whether you're a portfolio manager, podcast junkie, or just someone trying to sound smart at your next date, Positively Sloped is for you.
Yeah, new episodes are going to air every other Tuesday. So quick hits, deep dives, a little bit of banter, a lot of perspective, and maybe a little takeaways, too, of how you can maybe improve your personal life on how we look at ours.
That's right. Episode 1 starts now. Let's get into it. First topic, Scott, I think is the most pressing data that we've had today, or I should say yesterday afternoon. Microsoft and Meta blowout earnings reports, both top and bottom, both stocks providing hugely big, I should say, expectations going forward. This has kind of broken the market out of a little bit of a lazy slump here, just kind of meandering upwards. But what do these earnings reports mean for the tech sector and mean for Mag 7 and the market as a whole?
Yeah, well, you played a big role in that description there, because I'll tell you what, I mean, this was I think the lead in that the markets wanted to see with Microsoft, especially with how their take was on the cloud spending, and especially with AI coming up and the future spend that they talked about. And then putting that with Meta too, which has done the same kind of spending patterns that they've talked about too, and massive amounts of margin expansion too on those companies. So we're starting to see, Jake, as this lead in of the tech names, like you mentioned, they're starting to lead the market forward now into this next phase of growth. And I think that's what we're going to see with some of these other tech names that come out with the Googles and so forth, as we see these companies come out and start talking about how booming the AI spend is and how great the cloud spend is still.
That's what I think is the biggest thing. Is we got the reports over the last couple quarters that AI spend was just astronomical numbers for all these names, and it's starting to seem like they're seeing already early returns on that. I mean, pretty incredible. Microsoft now has joined NVIDIA at the $4 trillion mark. Last time we recorded, NVIDIA had just hit $4 trillion market cap. You made the joke about when companies hit $1 trillion and how big of a deal that is. We've now got 2 at $4 trillion.
Yes, and those are going to keep rolling ahead, I believe, because there's a lot of other companies out there that are starting to take that next phase in life, let's say, of their stock life with regards to what they're going to see in earnings, what they're going to see in profits, and what they're going to see in consumer demand. And see, that's really the thing that's coming out of this Meta and Microsoft era, is that we see these era of earnings now coming into play where not only is it just business spending, it's also consumer spending. And so we're starting to see it from the public to private sector, and also the business to consumer sector. And so these businesses are expanding their reach, and they're expanding their realm of discovery and things like that into your life. And so therefore we're seeing it show up in their earnings numbers.
Absolutely. So what would have been the biggest story had we recorded yesterday, right, was the Fed met again for another meeting, and we stood pat once again. Not a big story there, as we've been at a standstill all year on rates. The big story is, though, we had 2 dissenting governors, first time in a long time. What's it going to take to cut rates, and what does it mean that we've had 2 governors say we should be cutting right now?
It means to me that there's 2 governors on that panel, let's say, or on that list that maybe want to be the next Fed chairman. Maybe that's the deal. That's their early submission for their resume. Other than that, I don't think it really is much. I believe that the media is making a little bit more of a big deal. I know we're talking about it, so I see what that means. but more so it's one of those deals where there is some consternation in the Fed right now. There has been, and there has been for the last several years, really. It just hasn't been as voiced maybe as it was before. But the reality is the Fed is doing the right thing here. I really think they are. I think they're holding pat for good reason because we do have price stability. We do have what seems to be relatively maximum employment. I think, tossing this back to you, Jake, too, what would you expect to see, though, in the data to move the Fed here? Because the Fed's getting, I think, the data that we all kind of expected that they would get as of the result of their move, say, last year, and now they're holding pat and everybody's all upset with them again.
The funny thing is I think they're in a lose-lose situation where they're standing pat, and like you said, data is good. Markets are at all-time highs and continue to go at all-time highs. We're going to talk about that in a little bit. What's going to have to happen is they've been extremely adamant that they're going to be retroactive with data. And so what's going to have to happen is they're going to get data that is, let's say not really
a couple months old at times.
A couple months old.
And could be estimated data too. And the CPI, in the case of CPI,
sure.
Don't forget, that's the one thing too, that when you look at CPI and PPI numbers, the government has admitted that they're estimating some of those numbers because they don't have the team and the personnel because of the cuts from Doge, by the way, to make those numbers real. So they have to estimate some of those numbers. So not only are they getting old data, they're getting some estimated data too that's out there that they're using to basically make their interest rate moves. And that's a very interesting comment to make because of the fact that the Fed's relied on so much to supposedly support these markets and keep everything flowing. The real story here, though, is that the Fed is doing what they can do best, and based on what they have available to them, I think they're making the right moves.
Yeah, it's a great answer to your own question. Answer your question on in my words, I think what's going to have to happen is they're going to get data that doesn't look great, and then the public is going to be calling for why haven't you cut yet? And so that's what I mean when I say they're in a lose-lose. Is they're going to be retroactive, right? They're going to be responsive to data, and it's going to be too late, quote unquote. But everything, conditions have been very, very good for this year. And, sans Feb 19 to April 9th.
Sans, actually. Sans would be the French pronunciation of that, sans. Huh. And it's like sans, the issues that happened, though, with some of the interest rate debacles that we've seen over the course of the last couple of years where the rates have spiked and then dropped and spiked and dropped and nobody knows where they are. The key point, boys and girls, remember, is interest rates are best when they're stable. It doesn't matter really where they are. Of course, we want them lower. I get that, President Trump, but we want rates stabilized. And so as rates stabilize here, if the Fed can get into, say, a bit of a comfortable session or comfortable stance on interest rates, and if the consumer can start to realize that rates maybe not going down, but not be going up from here, I believe that's something that's going to take this market on its next leg higher.
Yeah, I think all the catalysts are there. We look at there is an awful lot of noise and an awful lot of interaction between President Trump and Fed Chairman Jerome Powell. Is that political pressure to you, or is that just drama and TV?
I think it's both. I mean, one is political pressure because he wants rates lower because he wants to be seeing the big booming lending. He wants to see the big booming stock market, which in typical concert theory, that is something that folks think is that lower rates mean higher stock prices. In some cases it does, but it has to be for the right reasons. If rates are down because we're in a deflationary environment, that's not necessarily a great thing. In fact, if you look over the course of time, Jake, as you know very well, I'm sure, that rates going up means that there's some inflationary pressure and things like that, which also benefits stocks because that means that companies can typically raise prices over time and get more earnings and possibly get more profit. So it looks to me like it's political theater at the onset, but then there is some sort of kind of juxtapositioning there with regards to it gives Trump a lot easier, say, path to hoe here when he comes out next year and says, I'm going to not renominate the Fed chairman. I'm going to do somebody else that's going to do things more the way I wanted. But don't forget, that's supposed to be a separated entity too. Right. The government and the Fed is supposed to be different. So given that he's going to have to still keep some things at arm's length, I would say to you, keep an eye on who they come up as the maybe possible nominees, because if those guys are too close or gals are too close to the administration, that could be something that might be a deterrent for them being nominated themselves.
100%. And we've seen names like Scott Bessent, as well as the two, like I think you so aptly noted, the two Fed chairmen or the two Fed governors that are dissenting right now. For me, it's all theater, right? I think we're going to hear President Trump lambast Powell until May of 2026, and then probably for a year after when his new appointee is doing the things he wants. I mean, you look at the trip to the Federal Reserve last week. I mean, that was literally a skit out of The Office. You have Trump talking about how much they spent and Jerome Powell's literally like there shaking his head, like almost doing like a Jim Halpert, looking at the camera, shaking his head like that didn't happen. And it's just all theater, and it's all, like you said, it's President Trump positioning to not renominate Fed Chairman Powell, and he's not going to.
No, he's not going to, and he's already made that clear. And so at this point, he might as well take some shots at him, hit him in the back, almost knock him over into the press crew.
Right.
Things that were just basically like you said, it's a joke. I mean, it was basically a sitcom. It was basically like an SNL skit. And it's something that I don't think the American people really benefited from at all when he went there to try to show what the Fed was really up to. I mean, that didn't really show the American people anything other than, hey, they're not lowering rates again. So that's all we know as of today.
Yeah. So let's move into kind of economic talk here.
We're going to talk economics?
We're going to talk a little bit of economics before we can get to all the good stuff, Labor shortages are absolutely hammering small farms compared to big farms. Immigration crackdowns certainly aren't helping either. And trade threats are a threat to the economy, not to use the word twice. But is it time to move all in on big farming, or is there opportunity for these small farms and family farms to bounce back?
It's going to be a little bit more challenging than I think folks originally thought. And that's because of, like you mentioned, the labor issues and some of the issues that the farmers have already, we're coming to the end of the season for a lot of these folks. And so they've already kind of changed the end of the farming season. If we talked to some farmers around the area and just in Chicago, it's like they've already started to change some of their plans as they shut down the farms towards the end of the season of the summer season, some of the harvesting. So that's already been kind of put into the system. So what happens going forward is going to be challenging because remember, a lot of these farmers need some of that labor to be out there working right now. And so we've had some hot weather. It's been very dry. You've heard about these things called the corn sweats. Not a fun thing to really experience, other than the fact that there's basically this whole kind of give and take between what the Trump administration is doing as far as illegal immigrants and immigration when it comes to labor and things like that in the United States, but then also what the farmers and some of these trade skills need as far as labor, because that is underfunded right now as far as people.
Yeah, and then there's some USDA data that showed large farms have posted a 17% net income gain last year, while small farms lost 8%.
They don't have the resources.
And we've also seen a historically high number of small farms going bankrupt. You mentioned weather. I mean, for those that know Scott, that is really your passion, right? You do this for a living, but your passion is weather. What is it with? I mean, you mentioned corn sweats, right? We talked the other day, and 100 degrees in Tampa Bay for the first time ever.
Which is weird.
You had
by the way,
the hurricane coming onto, or the tsunami coming onto the California shores. How does all that weather impact, how farms and farmers can really predict patterns and predict crops and harvesting?
Well, it's been challenging, and some of the extremes have been actually more on the side of the extremes, meaning like some of those extremes have been way beyond. I mean, you mentioned the hot temperatures in Florida, the dryness in the Midwest and things like that, and how that's spread to other areas. It's one of those things where farmers have had a tough time kind of gaming a system when it comes to what the future plans have been for the weather, because they've had the labor challenges and they've also had the changes in the weather. And then there's also been severe weather. There's also been significant rainfall in areas where it's been right next door to, say, some of the drought. Yeah. So the weather's been very challenging for a lot of these folks this year. I think more so as we've spoken as folks than it has been in the recent years. And so farmers have to make their best guess, but realize that too, they're just trying to get products out and they're just trying to get harvest done. And so therefore they're taking what they can get and working around the clock to kind of get that done.
Great. Just heard off in the distance, all the clapping. It's we've been down here a couple handfuls of times in the last year or so. This is by far the most lively we've seen the pit. I mean, that's got to be with Microsoft and Meta earnings driving the market higher.
Yeah, and the S&P volatile all over the place already so far, bouncing around quite a bit on some of the trading that's going on, net of those earnings reports too, which net of some of the other expected earnings reports too in the tech sector and some of the consumer sector as we come down the line here.
Yeah, absolutely. So in the news the last couple of weeks, unfortunately, the passing of three huge stars. My family doesn't like to say, but we say these things come in threes, and we kind of saw, with Hulk Hogan, Ozzy Osbourne, and Ryan Sandberg. Only one of those really in my era of any of those topics, wrestling, baseball, or music. Ryan Sandberg, I would say, is my dad's favorite player growing up in Chicago. Obviously, a Cubs legend, one of the best Cubs we've ever had. What are the three legacies for you?
I would go with Hogan, to be honest with you, because growing up in Southern Ohio, we basically watched USA Network all the time growing up. And so it was basically WWF Superstars, which was Hulk Hogan's basic regime. And so Hogan kind of led that whole space. And so losing Hulk Hogan as kind of a good icon of mine growing up was tough. And then obviously being in Chicago with Rhino was number two there.
Yeah, absolutely. And that was a sad couple weeks there. It seemed to be some eulogizing of him on broadcasts and from Cubs staff and whatnot. But three absolute legends probably gone too soon, unfortunately. Also in entertainment, right? I think the biggest news of the last couple weeks, Stephen Colbert. we've gotten a couple different iterations of this story, whether he was, pressured to be shut down by President Trump, whereas the Tonight Show or the Late Show really had a $50 million annual loss. So there's a ton of drama around it, but I think back to the conversation we had a couple weeks ago about cable TV and traditional media kind of being in a little bit of trouble with streaming services playing into all of these different, sporting events and whatnot. What does the Colbert, the Late Show ending next year mean for traditional TV?
Well, it depends on where that TV comes into play, right? I mean, Colbert, you mentioned some of the costs and some of the expenses and maybe some of the behind the scenes things that were going on at Colbert on the show itself that are things that are going to come out in the next few months that are going to be stuff that they were like, oh, this isn't why we shut it down. Sure, it isn't. But you look at places like The View, you look at other very politically charged, let's say shows or dramas, maybe.
Sure.
You look at those shows and you kind of look and see, well, maybe it isn't fair that some of these shows do go off on these wild political tangents, whether it's left or right. Now, they do that at their own risk. They do that with their own kind of opinions at their behest. But the reality is that it does go to show you that if there is some undue attention paid to your show, maybe even our show one of these days, these two guys behind us, that can be somewhat negative and that can be affecting somewhat of your future. So I think that that's just something to keep in mind as you have a very politically charged environment right now. We're coming up to midterm elections in just about over a year, and that's going to be something that's going to be interesting as we come down the line to see what kind of role many of our public television, many of our cable television play, or even our online television plays in what happens with a lot of the things that come to play in the midterm elections and further out in the presidential elections after that.
I can't believe The View is still a show that's on air, by the way. I
can't believe it still gets watched.
The interesting thing about the political piece of it is a lot of these shows do tend to go both ways with their criticisms, and it just tends to be louder when you have a president like President Trump who makes headwinds every day and is tweeting and interacts with these people, right? Typically with presidents, you don't see them engaging with late night shows and athletes and celebrities. So it's interesting. My thing is, Colbert, when this is all over next year, is going to have offers out the door and around the block.
Yes.
I mean, by I think streaming services, by I think other networks. Can you imagine the first few shows of that where he's just kind of doing a tell-all of what happened, his take on CBS shutting him down, maybe the President Trump piece of it? I think he's going to have ample offers if he wants to stay in entertainment.
He probably will, and we've seen that with some of the other talents that have jumped off networks and jumped to other places. They've had some nice recovery mode, if you will,
absolutely,
on what they've been able to say and what they've been able to talk about that happened, and then they come out usually so much the better as well because they can kind of be more themselves, which might be an interesting thing that Colbert could take from this is maybe he becomes more of what he wanted the show to be anyway because he kind of restarted. And so speaking of restarting though, Jake, I got to tell you, something that makes me think of you is today. The NFL training camps.
Okay, that's good.
We've had them kick off. We've had the kind of training camps go in the summer, and we've had tonight. First of all, I mean, we got the Hall of Fame game tonight.
Yep.
We got the Chargers at the Lions. Hall of Fame game is usually kind of a throwaway. I mean,
Absolutely,
they're like 2 downs or 3 downs where some of the regulars play, if that. But how much do you pay attention to kind of minicamp news, preseason games, rumors, reports, and stuff like that? And like, what's kind of been your take on the minicamp stuff in July so far for the NFL?
I'll be honest, I pay way too much attention to it.
Yeah, you do.
I mean, it is
doing that.
in my maybe. It is in my group chats nonstop, right? I mean, Chicago guys, we're hearing about how Caleb Williams can't master the offense and Jalen Johnson is holding out.
He's got Figuredale polish all over his hands, too, doesn't he? I mean, that's the problem.
We stopped that last year when we were losing, so that's a good thing.
Okay.
And across the league, we've got Terry McLaurin looking for a new contract and the Christian Wilkins story out of New York. So I pay way too much attention to this stuff. I don't really buy into it that much, but I'm very online. I'm very present for what's going on at the camps.
Yeah, and I think well, I do. I mean, I watch the camps just to see some of the position battles, see some of the contract battles that are in there too, and I like to see some of the guys that pop out as kind of these significant potential contributors or contributions to the offense. Because that's where you can sometimes see some of these training camp battles both get matriculated, but more so you kind of start to see where some of these guys will start to play bigger roles in the offense, maybe versus what they played before. And also if guys go down, then who can step up and maybe fill that role? Because as we've seen over the last couple of years, there's been a couple big training camp injuries that have played into the regular season that have affected the season itself as it goes down the line.
For sure. We're already hearing out of Bears camp that DeAndre Swift should be third in the depth chart behind Roshan Johnson and Kyle Monangai, who's a rookie. So it's all noise for now. We're end of July here, so we've got actually only a little over a month until the season. What's your spiciest NFL take for the season?
Spiciest NFL take is just going to be one of the seasons where I think a lot of the teams are going to play towards a kind of a center mean. I mean, I think there's going to be a lot more parity in the NFL this year. just because of the fact that I think the fact that we had a really good draft. I really enjoyed the draft this year. And I think that the way that the schedule is set up too, if you look at especially the NFC, there's going to be a lot of consolidation, I think, in the NFC this year. So it's going to be a really big battle for the playoff position over the course of the year, just because of the fact that I don't think it's going to be like last year where we had a couple teams that are like head and shoulders above, and then we had a lot of the bottom feeder teams. I think you have a lot of teams smushed in the middle. And so that's going to make every week big for these teams and big for these fans to come out and support who you like.
You talked NFC, I'll take AFC. I think the Broncos are poised to make a Super Bowl run.
Wow.
Obviously, huge strides last year with
odds, I think.
Maybe. Huge strides with Bo Nix. I think Sean Payton's an excellent coach. The defense, this is how good the Broncos are positioned, and that is that their draft pick, their first-round draft pick, they took a cornerback to be their second-best corner. So their defense is unbelievable. I think Bo Nix is going to continue to be great. I don't think we see a sophomore slump. Look for them in that incredible division to make a run to the Super Bowl.
Yeah, Nick surprised me last year. So if he steps up again this year, that's going to be incredible. And they do have a chance to emerge in that AFC West, which is always thought to be the Chiefs' division.
Yep.
But to me, I think the Chiefs are slowly losing their grip on that one.
I would agree with you there. Last point on sports here. I know we're a week or two off on this story, but it's a swelling kind of monsoon of news out of the WNBA, right? And I think it's great. But the latest story was with the All-Star game and they walked out with the shirts that said "Pay us more," and then Kelsey Plum went into her press conference and dropped the line that Caitlin Clark and her team were not present for those conversations. And there's just a huge, there's a division that is basically one versus everyone, right? And all of these players across the league are fighting for, honestly, their relevance in the league in terms of people want to say that Caitlin Clark's driving all revenue. She's driving all viewership. My thought is it's true, but what do you think about the back and forth and kind of the argumentative nature of the WNBA right now?
I actually like it. I like the WNBA. I think that's actually some real basketball that you're getting to see. Depending on who's throwing the basketball, depends on how good the basketball is. I get it, and who's shooting it. It goes to show you, though, Jake, depending on, we're talking about women's basketball, so depending on where you are in the country, there's certain afflictions, let's say, for women's basketball, or there's certain favors for women's basketball. Like some areas of the country appreciate women's basketball, I think, more than other areas do. And you've seen different cities thrive in that sense. And so I think that's the other thing too, is that the WNBA has a chance to expand here, but you need to expand to cities that are welcoming the sport. Yep. You can't just expand to cities that are having like a good basketball foundation, because that hasn't worked out, as we've seen with some of the teams that have faltered in the WNBA already. So I think the WNBA has a chance here to take some of the fervor and some of the clamor that's been going on with the actual sport itself and with some of the rivalries and everything that is happening, but make sure that you expand in the right ways and not just try to force it out on everybody, make everybody watch it, because they don't, after all.
I'm with you there. And let's be honest, the NBA is losing its grip on sports viewership. The finals, it's the Thunder versus the Pacers, and there's not a ton of gripping and compelling storylines there. I think the WNBA's got a big chance to
You look at
step
the ratings on the Thunder versus Pacers, which I think was like one of the lowest we've seen maybe ever. And I didn't even watch, and you didn't even watch it.
I was tuned into
If you didn't even watch the WNBA finals, the NBA finals, or the WNBA finals, that would tell you something. But also something, you're making a good point. The NBA needs some of those big powerhouse teams to come back, and these middle market teams that are kind of meandering a bit and then showing a decent, I thought it was a decent finals. It wasn't a bad finals as far as what we saw between the Pacers and Thunder. It wasn't something that drew everybody in as far as those big marquee matchups like the Lakers versus Celtics that we saw back in the 80s before you were even born.
For sure. And let's put the sports part of it aside for now. What I've learned in 28 years, right, is that rich people get rich and stay rich by making investments that make money. And you have demand for new teams in the WNBA, right? We have 2 expansion teams coming. Golden State, which fits the profile of what you talked about earlier perfectly, of a community, right? It's not a city, a community that loves basketball and is going to be welcoming to a basketball team. The owners are paying $50 million for that. I think that's who owns the Nets. It's the same guy that owns the Nets, but Joe Tsai. And so if you've got billionaires willing to invest that sort of money in this product, it's going somewhere. And I promise you it's expanding, and I promise you it's going to be better and bigger and better next year.
Yeah, and it will be. It'll be better the years afterwards. It's just, how long is that runway?
Yeah.
Because what's the time frame that you have that you're saying, like, kind of farther out, this is where we're going to make the cutoff? And I think you got to give it some time, though, because you're going to have different players come through. Caitlin Clark was an absolute boon to the sport itself, just like you were to the podcast industry, I think, Jake.
For sure.
Maybe somewhat similar there.
Podcast
Sorry,
industry has not been successful until today.
But the reality is that there's a promise there in the future of the WNBA that is brought to this whole rivalry, this whole excitement. It just needs to be catered the right way, and it doesn't need to be forced on everybody and shown to be like, hey, pay us more, and then all of a sudden you find out half the WNBA wasn't even in on the deal or in on the shirt.
Yeah, for sure. Scott, let's wrap up today's pod with our fade or trade segment. So you obviously know how this works. I'm going to bring up a couple topics. You tell me if you're fading or trading that trend, and then why. I'll give you back if I agree, and if we don't, then we probably fist fight, I think.
Wow. Okay, like Caitlin Clark and whoever her
That's right. That's right.
Angel Reese or somebody. Okay, good.
So
you
first,
be Angel then.
I'll be Angel.
Good.
First, I rebound well. First topic here. The U.S. Treasury posted a $27 billion surplus in June, which was the second largest monthly surplus in U.S. history.
Nice job. I'm fading that all day long. The government does not make money. We don't make profit in this U.S. government. I think we can tell that by the tens of trillions of dollars we have in debt. So that's a big fade. I think it's a great number to put up. It's a great T-shirt. Speaking of T-shirts, WNBA. But that's something, too, that I would just take away and say, hey, that's a great month. I don't think we're going to have another month like that probably ever.
I'm with you there. I'm fading that trend. I mean, we had 15.6 billion come in from tariff revenue, which is great, but this was largely pretty lucky timing with many benefit program payments being counted towards June. And the great big beautiful bill got passed, and that is certainly it's spendy, right? It's not going to reduce spending anytime soon. So I'm with you. I'm fading that. Next topic. As of today, right, we'll see how the day plays out with Meta and Microsoft driving the market, but we're currently up 80 bips in the S&P. If that holds or even comes down a little bit, that would mark 27 straight days without having a 1% move in either direction. VIX is down towards lows at like 1480, 15. Are you fading or trading the fact that the market's complacent and we're kind of just meandering upwards?
Yeah, what a great time to invest. I mean, holy cow. It's just it's more of a mathematics question of the numbers have gotten so big in the S&P. They've gotten so large in, say, the NASDAQ and, say, even the Dow, to where 1% moves are actually a lot of points. And so that's one of those things that's happening. And I think the other thing, too, is a complacent market is not a market that I would sleep on, meaning a complacent market usually will turn into a volatile market. And we've had a volatile market at times in the last, say, several years. We remember those feelings. And so I don't think those are things that are exactly like a precursor to the market staying very calm. But I would say that as we get to these higher numbers, it takes more to move the market sometimes. And so in reality, it's more of a mathematical solution than really maybe more of a sentiment question, but one that should be taken into consideration given that a calm market can tend to be, especially in the summer, can tend to be more of a normal environment until we get to these earnings seasons, as we saw from Meta and Microsoft last night.
So are you fading or trading the trend?
Oh, that's true. I'm going to fade the trend because I think that a calm market is just it's probably the summer, and it's also probably the fact that we haven't gotten into earnings yet.
Yeah.
Completely.
Here's our first disagreement. I'm trading that trend. July is historically the best month of the market in the year. And I think, that traders and investors were probably feeling, you mentioned the volatility of the last couple of years. I'm going to narrow that down to the first quarter of the year, the first 4 months of the year, really, where I think traders and investors are happy to take a break from the wild swings. And yeah, I think there's absolutely a vacation piece of this. People are out and about on lakes and doing whatever they do with their families at baseball games. And so there's a piece of this that I think I'm trading the fact that this is a somewhat complacent market. And I think it's a beast to be woken up because there's a lot of catalysts to go further.
Yeah, and there's money on the sidelines still. So there's money that will come out of certain assets, out of certain industries and into the marketplace itself, into stocks and move around. I think that's the other thing to keep in mind is look where the money's moving. So one thing we talk a lot about at Kingsview, one thing we do a lot in our portfolios is we move money around between different industries, different arenas. That's another thing too. That's a good
very
indicator.
Opportunistic.
How complacent is the market really when it actually is moving around to other sectors and other industries, but overall the market looks complacent, but underneath is when you see all the movement going on.
And last point on that real quick is we've got Microsoft and Meta, two of the biggest pieces of the market in the S&P 500, weighted wise, that are up. Microsoft has certainly pulled back to like 4.5%. Meta's still up 9%, but the market's not even up 1%. So that tells you that the broad-based, it's not moving up broad-based today, right? We've got some differing returns here in the S&P. Next topic. This is a fun one. I know we're going to have a good time with this. Oppenheimer raises their S&P 500 end of year target to 7,100. Are you fading or trading?
This is a tough one because I like the idea. I would have liked that idea better maybe a year ago or so, when actually it was been valuable versus after all the data comes out and after everybody's kind of getting into the market and chasing it up. Now they're like, oh my God, now we're going to raise our target. There's other banks that have done this too in the past. And so it's one of those things where I hate this because it does act as it's positive, but the reality is when this comes in, it's usually some of the last money to know.
Yeah.
And so it's like, if this was this easy and they were always right, this would be stuff that would be predicted when it's more valuable. And so again, not to not answer the question, I'm going to say, I'm going to feed it just because you're going to see a lot of these price targets come in now, especially as the earnings reports have come in so strong. be careful with that, because when that becomes conventional wisdom, that's just the chance to go the other direction when it comes to your investments.
I'm going to give you a little bit of a cop out here. I am trading the trend and the price target. I'm fading the news, right? And I'm trading it in terms of, yes, I think 7,100 end of year is a good number. I mean, it's about 9-10%
depending on the day. Yeah.
So I think that's certainly possible. We've talked about the catalyst to go higher. I'm fading the news because Oppenheimer started the year with a 7,100 price target for the S&P. In April, dropped it to 59.50, and now in July we're bringing it back up to 7,100. There's just no accountability for these price targets, and quite frankly, it's a little frustrating that you can just go back and forth based on where the market is.
Until you can look at the trends and see some of those underlying kind of sentiments of these banks or of these money managers, and realize that probably when they're cutting price targets, it's probably too late. And when they're increasing price targets, it might be too late as well, kind of like the Fed chairman, I guess. So when you look at these trends and look at these movements in the price targets, maybe look and see what the flows are like, because that might be a chance to see whether sentiment is overbought or underbought when it comes to the fact that these banks are basically reacting to data in the numbers that we've already seen.
Last two here, Scott. Happy Gilmore 2. 30 years later after the sequel, are you fading or trading the sequel and the reviving of the Happy character?
I always love Happy Gilmore. I think it's a great movie. I think it's a great character. I miss Chubbs, of course. And it's 30 years later seems like a long time. It seems like a long time to wait. I think Forrest Gump 2 is somewhere out there as well. Yeah. So we might as well throw that in there. I mean, let's get them all back. But
you think Forrest and Jenny are married still, or
Jenny? Yes, I do. I think they would be. Maybe they got divorced and then remarried. Who knows? These days, that's what people do. But it's one of those things where it's like it's going to get the fervor back when it comes to the movies that are out there. You see a lot of movies come direct to streaming, to the consumer, and so at least we get these kind of sentimental favorites back, and I think gets people back out there watching movies again. Which there have been some great movies out that have already come out as number 2s, number 3s, number 4s that I liked. So
yeah. I'm trading the trend. Like you said, that's part of Happy Madison's deal with Netflix. So this is direct on Netflix, more of that streaming talk. I watched this the other night with my dad. I was laughing. He was laughing. I think we looked over at some point and Maverick was laughing on the floor. You know, it's a funny movie. If you don't expect to go sit down and watch Interstellar or Oppenheimer or Odyssey that's coming out next year, speaking of good movies, it's a great movie. It's laughable. What I loved was they absolutely ripped on Live Golf with kind of the insane nature of their golf tournament that they had in the movie. I'm a traditional golf guy. I'm a purist. I like the PGA, so I'm trading it. It was a great movie.
Maverick being your dog,
your
husky dog that does laugh. I've seen him laugh, and he loves movies. So I agree that he probably loved it, and he's going to love some of the movies that are coming out soon. And also, too, it goes to show you how it gets you that togetherness back sometimes with the family, to sit down on your couch and see a good movie on Netflix or whatever it is, the streaming network, because of the fact that these movies are getting right out and pushed out to the consumer faster than they've ever been.
Absolutely. Last topic today, one that's very near and dear to my heart. We touched on kind of the mini camp stuff a little bit earlier. Are you fading or trading that? The rumors are Caleb Williams cannot figure out Ben Johnson's offense.
Well, I don't think a lot of people could figure it out, so I don't blame Caleb necessarily. I'd love to take a shot at him here, being a Vikings fan. He'll figure it out. I mean, I hope he does, because if he doesn't, they're going to have to bring in the backup, which is what? Caleb Haney? I don't know who the backup is on the Bears these days.
Tyson Bagent.
Nick Foles. Yeah, great. Another great player. So there's going to be some fits and starts with new coordinators. We've seen that in a lot of teams. We've seen that with teams that change their offense. We've seen that with teams that have had a lot of moving parts over the course of the last several years, as the Bears have. Last time I checked, they've changed a lot of personnel over the last several years. So there's going to be an ebb and flow to things. And I'll tell you, though, like Caleb Williams should probably start saying that he's getting it, or at least have some sort of more positive flow there, because it doesn't make the fans, I don't think, feel much more encouraged, given the fact that he had a pretty tough year last year at times.
Yeah, this is my biggest fade of the day. I mean, maybe it's homer bias. Some might say that. I don't really care. The Bears are going to be a powerhouse offense. What worries me more is all the news about Luther Burden, soft tissue injury, making too many TikToks. Just get on the field and practice. You know, we need that continuity of the offense. So we're going to be fine. It's the end of July. We're okay.
Well, you know about those injuries for doing too many TikToks, so that's not something that you can't speak on if you'd like to go off on that. And secondly, here's the other thing too. If you're Caleb Williams, you can't figure out Ben Johnson's offense, but Jared Goff could. So where are you putting yourself on that kind of intelligence kind of hierarchy? That's not a great place to be either. I think Caleb's going to figure it out. I think he's going to figure it out quick.
I think Jared Goff's a great quarterback, but Caleb's even better. Don't worry about it.
Yeah, we'll see.
Well, Scott, that wraps our first show of the Positively Sloped podcast. Covered some great topics today. We'll be back with you in a couple weeks for episode 2. Thanks all for joining. Any final words to part with, Scott?
Let's be positive flipped until then.
I agree.
Kingsview Wealth Management, KWM, is an investment advisor registered with the Securities and Exchange Commission, SEC. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Kingsview Investment Management, KIM, is the internal portfolio management group of KWM. KIM asset management services are offered to KWM clients through KWM IARs. KIM asset management services are also offered to non-KWM clients and unaffiliated advisors through model leases, solicitor agreements, and model trading agreements. KWM clients utilizing asset management services provided by KIM will incur charges in addition to the KWM advisory fee. This material has been prepared by Kingsview Wealth Management, LLC. It is not and should not be regarded as investment advice or as a recommendation regarding any particular security or course of action. There is no guarantee that investment strategies will achieve the desired results under all market conditions, and each investor should evaluate their ability to invest for the long term. The information herein is general in nature and does not address individual situations and should not be construed or viewed as any type of individual or group recommendation. Be sure to first consult with a qualified financial advisor, tax professional, and/or legal counsel before implementing any securities, investments, or investment strategies discussed. The commentary presents the views of KWM that is believed to be accurate as of the date of publication. The views of KWM may change, and KWM disclaims any obligation to advise investors of such changes. Certain information was obtained from sources that KWM believes to be reliable. However, KWM does not guarantee the accuracy or completeness of any information obtained from any third party.